beer makers Guinness Nigeria International Breweries reported negative post-tax profits as the losses from foreign exchange continue to impact gains in the sector. Analysts at Vetiva believe that stepping up local sourcing will reduce FX demand and then reduce risk to balance sheets. Oluebube Nwosu is a consumer goods analyst at Vetiva Capital, joins me now for this discussion. Thank you so much for your time, Oluebube. And let's first start with your take on the results we've seen so far.
Yeah, good afternoon. Thank you for having me. So just to clarify, you're asking for the updates on Guinness in particular or the entire brewery space?
Yeah, the entire brewery space.
Okay, so far we've seen results from Guinness and we've seen results from international breweries as well. We're still expecting from the largest in the space, which is Nigerian Breweries. And so far with the results, we've seen the top line grow, and we can see that this is due to inflation-induced pricing. So we've seen quick succession of increases in prices of goods across board, and that will include both alcoholic and non-alcoholic drinks as well by both companies, and it has really helped them to boost their revenue growth, both having over 20% revenue growth year on year, which is pretty impressive. However, we've also seen that their costs, their inputs have also increased as well. And that's also had an impact on how much gross margins can actually grow. Guinness, for instance, had a higher growth in its cost of sales, and that just reduced its gross profit margins basically. But we've also seen these players make efforts at reducing their operating expenses. So we've seen them have a much more agile approach to making expenses on an operational level. Guinness, for instance, has been touting its productivity unit. And that's basically a unit that just looks at ensuring that the company is making as much productivity gains as possible, basically minimizing waste. But one thing that has affected the bottom line is FX losses. And this is something that we've seen over the years, but increasingly in the year 2023, we saw it take a huge stab at their earnings. And this was following the devaluation that happened in June 2023 and the volatility that has followed since then. There was huge volatility towards the end of 2023, and that's really what has affected their bottom line. So both companies reported losses at the end of the day for their bottom lines.
But Oliver, how do you think these companies can work around these FX losses and hedge against that?
So the companies are going to have slightly different ways to approach it, but overall it's going to be similar in the sense that they're just going to look to reduce their needs for FX obligations. Take, for instance, a company like Guinness that is looking to reduce its imported premium spirits. This imported premium spirits, while it does not get above 5% of its revenues, it's responsible for over 20% of its FX needs. So it just makes sense that the company wants to spin off that particular sub-segment to become a standalone company that will be handled directly by its parent organization. That makes a lot of business sense for them. For both companies and across the space, we're seeing them stepping up their backward integration plans, and this simply means supporting local farmers for them to be able to source more of their grains locally. We've also seen some of them try out other grains apart from wheat. Seen them use other grains as well, so as to reduce the need for their FX liabilities basically. So that's some of the things that the companies are doing. On the other hand, of any FX, we're seeing them looking to step up their exports. Guinness, for instance, has had exports as part of its revenues for some years now, although we did not see significant growth in that for last year. The company says they expect to step up on that this year because they really need the FX. So what they want to do basically is reduce FX obligations to a reasonable minimum and then export some of the products to now gain the FX for that minimum that they're going to spend, so they don't have to always depend on what's available in the market.
Yeah, the Nigerian macro environment is still making it quite a hard place for these companies to do business. And I'd like to get your thoughts around your outlook on how you see inflation, which definitely has impacted the purchasing power of most of the customers here. How you see that playing a big role this year?
So can you come again with that, please?
Yeah, how do you see inflation playing a role in the earnings of these companies this year?
Yeah, we expect to continue to see a price increase as inflation remains elevated, given the fact that the current gallop or boost in inflation started from the second quarter, close to the second half of 2023. We still see low base effects playing out from now till about June 2024. So that would mean we expect inflation to remain elevated in that time frame. And if it remains elevated, we expect them to also increase their prices so as to keep up with their earnings. The companies will continue to have to make the trade-off between volumes and just keeping up with their revenues overall. So you continue to impact on their pricing. You will have an impact on their inputs. You have to try to renegotiate certain contracts, try to think about productivity. But definitely, inflation remains a major play, in the financials even for this year.
Yeah, because I was going to get to the issue of volumes here and market share in the market here, and how you think that's going to play out this year.
Yeah, so for volumes, for instance, it's a thing of people deciding whether they want to still consume as much beverages as they had consumed in previous years. Generally, there's a feeling of consumer wallets. It's across industries. So for each product, it would then be a case of consumer deciding if they consider this product to be an essential item or a non-essential item. So products that tend towards essential items for consumers would have a much more inelastic demand than the ones that are seen as non-essentials. And we've also seen a level of decline or stickiness in volumes for these companies across that spectrum. For instance, Guinness, that has its premium spirits, that has its mainstream spirits, then it has its beer market, also has its malt market. We've seen volumes sort of stay sticky at the premium end. For folks who can still afford to buy the premium spirits. While we've seen volumes grow, at the lower end, which is the mainstream spirits, and these ones are locally produced, they are sachetized. We've seen volumes grow in that space. Meanwhile, the ones at the middle, that's the regular beer and malt, we've seen volumes really take a nosedive, and these ones have also had the most significant rise in their prices. So that's where the biggest trade-off is happening, volume and pricing, while we've seen stickiness for premium and we've seen volume growth for mainstream or the low value or the lower end of the products.
All right, now thank you so much for that breakdown. They're definitely quite interesting insights to the brewery market here in Nigeria. I've been speaking to Oluebube Nwosu, is the consumer goods analyst at Vetiva Capital.